Hey guys, welcome to my channel Success Sequence where we daily analyze Nifty and Bank Nifty for their important levels and expected upcoming move. So in our last video I discussed that the market is trading below its important level, which is 55 days exponential moving average, and as long as market trades below this level we cannot expect any upside. So if you see today market did opened right above its 55 days exponential moving average, which is a good sign. So as I suggested in my previous video, if you see a market is opened near 55 days exponential moving average, it did came down, further had a support and again went up. So as I suggested, you could have taken a bullish position in the market, and as I suggested, you could have waited for the up move till 9830, however which did not market get. But if you can see, market did achieve its one candle high, which is which is around 9825. So around that level, if you see some sort of resistance, you could have booked your profit. Apart from that, if you see market did face resistance at its third candle, which is this red one candle. You can see market did face resistance at this level. So 9830 is an important level, and if you want to see further highs, market need to break above that level. So let us discuss about what market participants are expecting by analyzing option activity range. So what I can say is my option activity range is from 9500 to 10050. So down points, for downside there are 300 points and upside there are 250 points. Now let us check out what the market participants is expecting and what position did they made. So if you can see on a call side, I can see almost all the strike prices which are included in the option activity range. I can see fresh bullish position at a high levels around 9950, 10,000 and 10,050. If I talk about the strength of that bullishness, I don't think so there is much strength. Only small amount of change in open interest has happened, which suggests that market participants are expecting some sort of up move, but still they are not confident. Apart from that, if you see market is in its midweek, in its midpoint, so there are very few time left to the expiry. So even if you buy calls at a higher level, if market did get there eventually, but the volatility is not there, you will not be able to make money in the call option. So unless and until we see a huge buying in at higher levels, we might not be able to go long, especially if you are option buyers. So at some level like 9500 to 9650 and 9750 to 9900, I can observe that call short covering has happened, which is also bullish sign. However, the change in open interest is not as big as one should expect. So still market participants are holding their shorts and they are expecting a downside again. So if you can see, market did went up, but it did not cross its important resistance level, and finally it came down. So if you just analyze the candlestick, it suggests that the higher level market participants are not confident, and that is the exact thing we can also observe from the option chain data, or rather option activity range. So on a put side, I can see puts are being written. So maximum put writing has happened at a level of 9700. Almost 8,50,000 contracts have been added. Apart from that, put long covering has happened at a few strike prices like 9650 and 9850. So the change in open interest is not that huge, but 9500 at 9500 strike prices, maximum change in open interest has happened as far as put writing is concerned. So almost 11 lakh new contracts have been added. So 9500 we can expect is a strong base and will not be broken that easily. So 9500 and 9700 are two strike prices where the maximum put writing has taken place. So we can expect those level should hold if at all we see a down move. But my analysis is the markets is trading at above is 55 days exponential moving average. Although we did see some sort of short covering or some sort of pressure at higher levels, market did went below uh, at the end. But what I expect is, if you see MACD has almost generated a bullish crossover. So if it generates a bullish crossover, we may see the next moving average being broken, that is 34 days exponential moving average. So if that moving average gets broken, and if we see a bullish crossover in the MS, we may expect a high levels to come in this month only. Further, if you see, RSI is now also taking support at its previous levels, so that is also a comfort for the bulls. But as far as this up move is concerned, this up move is not as much strong as we one should have expected. And also tomorrow is a holiday, so people might have hesitated in creating a strong position, rather they have covered some of their position. So this move we cannot rely much, but let's see what market comes up with the next move, and then we can take a call. So that was analysis for the Nifty. Now let's quickly check out the analysis of Bank Nifty and what Bank Nifty is suggesting. So if you see, option activity range is suggesting 400 points up and 100 points down, so that is 24,000 to 25,000, 24,500 kind of range market participants are expecting. And as mentioned in my previous video, as you can see, Bank Nifty is now uh, hovering around its 34 days exponential moving average, taking support at its 55 days exponential moving average. So as I said, unless and until market breaks this range, we may not see any strong or convincing up move or down move at any of the sides. So what I expect, let the market break this range and then we can take a call. So I can see that the call writing has happened at a strike price of 24,200 to 24,500. Change in open interest is not that huge, so still we can expect some sort of bearishness at a high levels, like 24,500, 24,400. But change in open interest, as in the percentage terms, is higher at a 24,300 level. So we can expect that 24,300 is should be the next stop. And if Bank Nifty see some sort of reversal, if it at all approaches at that level, you should book some profit. So let us check what the put participants are expecting. So as I can see, from 24,000 to 24,400, puts are written all over the place. 24,100 maximum change in open interest has happened as far as change in percentage terms is concerned. So almost 400% change in open interest has happened at 24,100. Again, change in open interest is not that huge, but you can expect 24,100 to hold. And I expect market to move at a higher level, since it has also started to make higher highs and higher lows. So if this formation holds, we can see some sort of up move. So now let's talk about at what level we may see some reversal if at all market goes up. So guys, if market breaks 24,190, first target would be 24,260, and the next target could be 24,300 something. So I already informed my subscribers that what are the level we can expect. So as I said in today's recommendation at 259, that we may hold our long if near closing Nifty trades above 9,800 and Bank Nifty closes above 24,190. In that case, Nifty target could be 9830, 9850, 9880, and for the Bank Nifty targets could be 24280, 24320, and 24360. So all are spot values. So let us hope that the market did go up at higher from these levels, and we may make some profit. So as I suggested in my previous video, if you see some sort of some sort of rejection at high level or some sort of support at lower level, you can definitely buy at that point, or short at that point, considering whatever the at what level the rejection is happening. So if you see some sort of rejection at a higher level L, as also I suggested in my previous video, you should sell, taking a risk of you can track the previous candles to find out what is the level of risk you should take. And if you see the risk reward ratio is favorable, means if you see there is a small amount of risk, and if market goes down, you can make much amount of profit. Like as we can see today, market did go up, but at its important level, like 24190, it faced resistance and finally it came down. So if you have done a selling at high level, you could have made some sort of profit. So That way you can take a risk reward favorable trades and can make profit if at all market moves as per your expectation. So what I feel is, let the market make a move and then we can accordingly decide, considering how much change in open interest at important levels are happening and how the moving averages are behaving at a particular level. So that's it for the today's video, guys. If you like my video, please hit the like button, subscribe to my channel and share it with your friends and family. And if you have any doubt, you can always mention it in the comment section. Thank you.